Ladies and gentlemen, good day and welcome to V-Guard Securities Limited Q2 FY24 earnings conference call hosted by ICICI Securities. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that the conference is being recorded. I now hand the conference over to Mr. Aniruddha Joshi, sir. Thank you and over to you.
Yeah, thanks, Akshay. On behalf of ICICI Securities, we welcome you all to Q2 FY24 results conference call of V-Guard Industries. We have with us senior management represented by Mr. Mithun Chittilapalli, Managing Director, Mr. Ramachandran V, Director and Chief Operating Officer, and Mr. Sudarshan Kasturi, Senior VP and Chief Financial Officer. Now I hand over the call to the management for the initial comments on the quarterly performance, and then we will open the floor for question and answer session. Thanks, and over to you, sir.
Thank you, Aniruddha, and ICICI Securities for hosting this call. A very warm welcome to everyone present today for today's call. Thank you for joining us today to discuss the operating and financial performance of our company for the second quarter and the first half of financial year 2023-24. I trust all of you have had a chance to refer to our investor presentation, which was shared yesterday. The second quarter witnessed subdued consumer demand, especially in the discretionary categories like consumer durables, thereby impacting top-line growth. We have reported a consolidated net revenue of 1,134 crore in Q2, which is higher by almost 15% on a YOY basis. Excluding the revenues from Sunflame, for like-to-like comparison, the revenue growth is 8.7% YOY. In Q2, the South markets grew by 6.7% YOY, while the non-South markets grew by 11.3% YOY. As non-South markets continue to grow in double digits, their contribution to total revenues has increased to 43.8%, indicating enhanced scale for V-Guard across all regions of the country. In our electronic segment, comprising of stabilizers and inverters, we reported revenue growth of 12% YOY. In the electrical segment, which remains our largest revenue contributor, comprising of wires, pumps, switchgears, and switches, we registered a growth of 9.6% YOY in Q2 FY2023-24. In the consumer durable segment, where we market fans, water heaters, kitchen appliances, and air coolers, the growth has slowed to 5.1% YOY. The effect of sluggish consumer demand and tepid weather conditions has impacted top-line growth, particularly in the consumer durable segment. We have reported an improvement in gross margin to 33.8% in this quarter from 29.3% in Q2 of last year, an increase of 450 basis points YOY. Further, the gross margin is also higher by 130 basis points compared with 32.5%, which we reported in the first quarter. Softening of commodity prices is reflecting in the gross margin, and we are now moving closer towards the pre-COVID levels. We believe we can further drive another 100 basis points improvement to reach the pre-COVID level gross margin. EBITDA, excluding other income, was 93 crore in Q2, an increase of 26.5% YOY. In Q2, we have recognized a fair valuation gain of 10 crore on the Gigadyne investment. Gigadyne is making good progress towards meeting technical and commercial milestones. The V-Guard board has also approved a further investment of 20 crore in Gigadyne in order to fund scaling up of the pilot plant, product specification improvement, and preparatory work required for Series B funding. Excluding other income, EBITDA margin of 8.2% is 80 basis points higher compared to the margin of 7.4% of Q2 of last year. Profit after tax in Q2 FY24 was 59 crore compared with PAT of 43.7 crore in Q2 of last year, an increase of 35% on a YOY basis. Cash flows have remained strong. Cash from operating activities are at about 300 crores during the first 6 months, and it has helped us to fund CapEx and capacity expansion. And we have also fully repaid the working capital borrowing of 100 crores that existed at the beginning of the year. In V-Guard Consumer Products Limited, our wholly owned manufacturing subsidiary, we are progressing well as the manufacturing units are coming up as scheduled. The first plant in Pantnagar has reached its planned output. The battery and kitchen products unit will be commissioned in Q3 and will be scaled up in Q4. In the case of Sunflame, there is a decline in top line growth, although the margins are healthy. The entire kitchen appliances industry at large is currently witnessing sluggish demand. There are also some internal gaps we have identified, and we have undertaken action to arrest the decline. We are also working on initiatives to start realizing the synergies between both V-Guard and Sunflame. Consumer response for our recent launches like fans and mixer grinders have been positive, and starting with the upcoming festive season, we expect strong top-line growth in the second half of the year. With that, I conclude my opening comments and would like to thank Aniruddha and his team at ICICI Securities for hosting this call. I would like to now request the moderator to open the floor for Q&A.
Thank you very much. We'll now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handset while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Natasha Jain from Nirmal Bang. Please go ahead.
Good afternoon, gentlemen. My first question is on the electrical side. So our product category consists of wires, switches, and switchgears, and all these are ancillaries to real estate, which is doing well. So what could be the reason for us to not post a stronger double-digit kind of growth here compared to all our peers? So first question is that, and in the same segment, can you also throw some light as to how the pumps segment did? Like, are we beginning to see some strength building there, or is the market still stressed?
Okay, so regarding electrical, V-Guard, sells a lot of its product on a B2C basis, which means we sell through distributors to our retailers, which then goes into individual housing or small projects. V-Guard's presence in very large projects is limited. So, but apart from that, most of our peers have also mentioned that demand for house wiring cables has been muted for last quarter. So, what we have come to know is that even in B2B segment in house wiring cables, the demand has been muted. The only segment that is doing well is the large infrastructure projects, run by central and state governments, which are using industrial and underground cables. That is the only segment that seems to be doing well within the cable, and where V-Guard does not have any presence. Regarding pumps, yes, so we have now completed almost 2, 3, 4 quarters of decline, and I think in last quarter onwards we have started to see an increase in sales. However, it's not enough. The largest contributor in electrical is wires, so with the wires sales not growing very fast, the entire electrical segment growth has come down to something like 9-10%.
Understood, sir. That's helpful. And sir, my second question is on the consumer durables portfolio. So our channel checks indicate a slowdown for fans demand, and also a possible price cut. So did we at V-Guard experience something similar for fans?
See, we have not cut any prices, but I think when there was unseasonal rains in north, some companies, I think even us, we were forced to offer some discounts in those parts, northern region, because north was completely washed out. This has also meant that in fans and water heaters especially, the price increases that were required to be taken for offsetting the raw material prices increase has not been fully taken. And we hope in the next 6 months, some of that will get corrected as, we enter the season for water heaters, and as we will be entering season for fans in March.
And so how is coolers, air coolers?
I think for us, coolers has done well, but coolers is, still, coolers on an annualized run rate will be close to 90 to 100 odd crores. So it is not enough to really pull up the, entire consumer durable basket. The larger, products like water heaters and fan contribute most. This quarter especially, we have seen softening of demand for water heaters, which is better last year. And that has pulled down the overall, performance.
Understood, sir. Thank you. I have more questions, but I'll get back in the queue.
Thank you. The next question is from the line of Rahul Agarwal from InCred Capital. Please go ahead.
Hi, good evening. Thanks for the opportunity. So first question on ECD margins. Where do you see this number by March 24?
So I think we used to be something around 5-6%, EBIT margins for ECD. And I think we have indicated that we would like to, increase our margins by at least 1%, and most of that increase would come at least 2 to 3% of that should come from consumer durable segment. So we are hopeful that, starting with water heater season, I think we are also a little unfortunate in the sense we are sitting still with some old inventory of water heaters which were produced last season. I think once that starts, getting offloaded, we are hopeful of increase. But we have to also understand that demand is extremely sluggish. So market leaders, major market brands are refusing to take timely price increases, or like someone mentioned earlier, some of them are resorting to price discounts, which will mean that it's going to be difficult for us to recover these margins. It'll get delayed. But I think apart from water heaters, fans, we are seeing some traction. So we have some new launches that's gaining good traction, and they are also on the premium side. So we are hopeful that, in fans at least, we should see a better performance this year. Water heaters, we have to wait and see. The season is yet to start. There is, we are hoping that the winter does kick in soon, and that should drive the demand for water heating.
Got it. Secondly, on Sunflame, given how the first half has been, would you still think that 330-350 crores of top line with a 11-12% operating margin is possible for the full year?
So I think we have to also see Sunflame in relation with the performance of the entire kitchen industry. As you would have noticed, few of the players have already announced results. The larger players are talking about 15 to 16% YOY revenue decline. Sunflame's decline has been slightly higher because it has, like we mentioned in the opening remarks, there were some product gaps. There were some issues in terms of after sales, which has all got resolved. And we have also, the new team has settled down well. They came on board only in April and May. So they needed 3-4 months to, take over the, take over the management of Sunflame. I think H2 we should post much better numbers. But we have to also keep in mind that the entire kitchen industry is degrowing sharply. So our hope is that in relation with the industry, we should do better. I don't think we will be able to post a full year increase in sales. But I think in H2, we are hoping to, at least look at the numbers we did last year. So at least arrest the decline. We'll wait and see. I think let's see how the demand goes. But because since we have to also keep in mind that post-Diwali, the sales have been very muted for kitchen appliances in last year. So the base is also low for Sunflame, for last year in H2.
Got it. And lastly, on Gigadyne, just your points on the equity valuation. I think it's a bit not clear from the press release. What is it right now? And how will V-Guard benefit from this investment? Apart from the monetary upside and on the financial side of it, what is the business goal here?
Okay, Ram, I'm not sure whether you were able to hear the question properly. But
I heard the question, Mithun. I'll answer. So I think there were two parts to the question. One was you were trying to understand, the source of gain. So fundamentally, what has happened is, there was a valuation on the basis of which we had invested into Gigadyne. 2 years had passed, so the accountants, annually, they look at these investments and they mark to market. So they felt that the technology development agenda has progressed further, and with the pilot plant, the technology has also been commercialized at a pilot plant scale. What was otherwise very basic and getting done at a lab scale. So I think they wanted to reflect the improved valuation consequent to the progress on technology development and technology commercialization. So I think we had got the valuation done of the entity, and we are just reflecting the incremental valuation and accounting it as gain. It is notional, so it is remaining on the books, and will be the case. So it's it's basically an accounting requirement. Coming to the second part on how V-Guard will gain from Gigadyne, I think Gigadyne is not a financial investment for V-Guard. It's a strategic investment for V-Guard. Yeah? And with that investment, we are making investment in what I would say in the deep tech space, which has high risk also. I mean, not every initiative in that space succeeds, and we must keep that in mind. But fundamentally, we believe that this technology is the best fit for our application in inverter and battery, and which is the reason why we have decided to back this technology development. We believe that in the next 18 to 24 months, they should be able to move from pilot scale to manufacturing. So I think once the manufacturing activity commences, I think V-Guard should be able to place these products in the market as a V-Guard offering, and I think that should be able to drive our revenues and maybe in time profitability once the initial investment towards building this concept in the market is through. Yeah?
What is the value of Gigadyne today?
Sudarshan,
the valuation is now at 293 crores.
Okay, sir. Okay. Thank you. I'll come back in the queue to understand further. Thanks.
Thank you. Ladies and gentlemen, you may press star and one to ask a question. The next question is from the line of Bhavin Vitlani from SBI Mutual Fund. Please go ahead.
Good evening, gentlemen. So my first question is on the electrical segment. So if you could just help us understand what percentage of the segment is wires, and what was the YOY growth in the wires segment in the quarter or the first half?
See, we don't give out, these figures. So, we will discuss this offline. But wires is a very large part of electrical. I mean, wires is the largest constituent of that, subcategory.
So actually the question was because you mentioned pumps has been degrowing. So, and in that case, is it that...
If I may answer that, I think, the wire growth is bringing down the electrical growth. The pump growth is moderate and not recovered to long-term growth levels. So typically, pump, we would grow between 8 to 12%. Yeah, and I think it is much below that. However, we have not degrown for the first half. So yeah. So the other categories have posted strong growth, and cable growth has been lower than the electrical category growth. Yeah.
Sure. Because I was really surprised because the KEI results today, which they list out the wires as a segment, that segment grew like 22%, and so was a little disappointed looking at single-digit numbers. So is it that something that the competition has got aggressively into class 5 and which V-Guard is not in, and given the quality standards that you have, and that is hampering the growth rates?
No, I think it's a question of choice. So many years back, V-Guard at least made a choice to be in the B2C space. So we exited whatever, we used to have businesses that was supplying UPS systems to bank ATMs, which we shut down. We had businesses that were supplying large underground cables to big EPC contractors, which we shut down. So these are all conscious choices that were taken from 2009 to 2016-17. And for many years, EPC business in India struggled. But now there seems to be, a cycle. So we believe it's a cycle. So maybe there is a infrastructure boom that is happening in the country. Probably also it is going to happen before the election, and they want to showcase some, some growth, some investments in the country before the election. So all these things will happen. But I think long term still the consumer business will do well. So many players like KEI and Polycab are heavily indexed towards project business, whereas brands like us are more into the retail part of the business. But I think even in house wiring cables, many of our larger peers have told that have indicated that there has been slow growth. So I don't think it's a V-Guard only issue. KEI, I'm not sure. I mean, again, it's a projects company. It's there in retail, but it's more of a projects company. But I can tell you that the retail consumer, the B2C part of wire business has been slow.
Yeah. Right. The second thing is I want to understand the margins on the consumer durables segment, which has been negative in most quarters, even in this quarter. And in prior quarters, you highlighted that the newly commissioned fans facility, which was underutilized and it was ramping up, and then there were issues related to the TPW fans which were imported, and you had to pivot to the local, and that had some cost issues. So if you could just help us understand the negative margins in the consumer durables segment and the efforts taken by the management to kind of turn these around, and when could we see the 5-7% margin bracket as you alluded to earlier in this?
Nitin, can I take that?
Yeah.
So I think, we need to look at it in two parts. One is gross margin and one is EBITDA. I think EBITDA is fundamentally, the business is, it's a growth. I think the consumer durable growth has been, weaker, first half of this year compared to the kind of growth rates that we have been enjoying last 2 years and compared to what we had planned. So I think, some amount of stress is coming because of that, because the growth has not been adequate to, cover the investments that we have been making to scale up this business. Yeah. That's one part of it. I think the other part of it is, fundamentally, related to the margin recovery. I think while, margins on electrical and margins on, the electronics have by and large recovered gross margins. Yeah. I think we have an intervention in terms of manufacturing facility coming up for the battery and we had commenced a factory for inverter and stabilizer, which I think some more benefits we expect in the next 6 months to 1 year. So I think the margin recovery journey on electronics and electrical is by and large complete, right? However, I think because of the slowness in the market, actually the market has been slow from I think September, October of last year. I think it was more strongly seen in the fan category and kitchen. And lately it is also being seen in water heater, fundamentally because part of it is seasonal also, because I think the summers have extended in east and south. So I think this year the water heater season is slower to come by. So these factors are affecting the top line growth, and that's kind of affecting the conversion of gross margin to EBITDA. Second thing is, the pricing transmission, because of the slowness in the market, I think, there is a lot of competition. So the pricing transmission has also been impacted. So although our, gross margins have improved, in this category from last year, if you look at half-year basis, we have improved our gross margin by about 2% and probably the exit gross margin maybe even 2.5-3% higher, 3% higher. But I think there is another 3 to 4% of recovery which has to happen. Yeah. I think we have some interventions in this area. I think we have product launches in fans, and I think that should change the product mix and support the margin improvement, even if the growth is tepid. Thankfully for us, fan growth has been all right. Yeah, fan growth has been all right. Even air cooler growth has been all right. So I think kitchen again we are setting up a factory, I think, which will help our competitiveness and help us to recover our gross margins in this area. So I think water heater and fan are the two categories, where we are expecting that it will take some more time. Hopefully, in the next 3 to 9 months, I think fan should come back. Water heater should partly come back, towards this upcoming quarter. And I think some recovery will happen only next year again when the season starts. Because because of the lower uptake, in water heater, the inventories are stretching later into the season. Yeah. So, and that's affecting our ability to benefit from the easing commodity environment, right? And also, because of slower growth, I think, the pricing transmission is also getting impacted. So I think there are no fundamental issues here to my mind. I think, some of the categories, will roll over. I think a bit of challenge on water heater till the commodity transition happens. That part of it is a bit of a problem for us compared to the market. Yeah. But I think to the extent that growth is slower in water heater, I think there is some pricing pressure also which can develop. So keeping all that in mind, I would say that it will take a slightly longer for water heater to fully recover to pre-COVID levels. But I think we'll see some recovery further in the upcoming quarter.
Last question from my side. If you take out the Sunflame acquisition, while the growth is high single digit, 9% thereabouts, but the employee cost increase is closer to the 20% mark. So if you could just help us understand this bit.
Yeah. So that's what I want to get. Now, there are some swings in employee costs when you compare with last year. It basically comes from one, variable pay provision, and second, the addition of some of the subsidiaries. Last year we had reversed the variable pay provision because at the end of H1 it was clear that a payout is not going to happen. This year we have provided in full, so there is about a 20 crore swing in that alone.
So on a like-for-like basis,
the underlying payroll increase is about 15-16%.
About 15 to 16% is the like-to-like increase if you remove all these things. Okay, so this looks like much higher than the growth, the underlying growth in the industry, and so is it that because are we seeing growth in the other sectors and that's the pressure on the?
Yeah, can I answer that? Yeah. So I think you also need to see this, this together with our transition from what I would say sourcing to manufacturing, right? So if you look at it, last year, we had one new factory come up, which was in Pantnagar, which was stabilizer and inverter. Okay, and we have the battery plant, which is and the kitchen plant, which is likely to come by end of December. I think staffing costs related to that are also sitting there.
And even if you take out Sunflame also, Simon addition itself has brought in 120 odd head count, plus establishing VCPL and manufacturing unit. So there are some FTE increases. Which takes the payroll increase to about 15 to 16%.
I understand. So it's just a lag impact, and as revenue catches up.
Yeah, I think also what needs to happen, right? Our gross margin improvement has to be more because when we were sourcing, the gross margin was including the manufacturing cost, right? But here that's being accounted below.
Fair enough. Yeah. Thank you so much for taking my questions.
Thank you. A reminder to all the participants, you may press star and 1 to ask a question. The next question is from the line of Sonali Salgaonkar from Jefferies. Please go ahead.
So thank you for the opportunity. So my question is an extension to Bhavin's earlier question. We have seen about 450 bits rise in the gross margin and just about 70 to 80 bits rise in the EBITDA margin. Of course, one of that you explained as employee cost. But there has been a sharp rise in the other expenses as well, wherein we maintain that we have retained our ad or promotion spend to about 2.2% of sales. So could you please throw more color as to where we are seeing this increase and how sustainable is this going forward?
So I think there are, apart from employee cost and A&P, the other, of course, A&P has not gone up significantly. The other thing that has gone up much more than last year was travel and, travel costs. So the frequency of traveling and all that has increased much more because we have now, there is no restriction on travel as such. So sales team traveling, that also includes local and outstation travel that has significantly gone up. And also, some of it is due to the increases in, hotel prices and all that, which we've been reading about in the paper where, there has been a rebound in tourism. So some places, the hotel prices have gone up significantly. So all these things are adding to the other expenditure. One major item in other expenditure is what Ram mentioned. So outsourced manpower cost, which is bulk of it is sitting in the factories. They come in other expenditure. So like Ram said, the increase in gross margin had to be more than this to offset that. So some of the increases are due to reduction in, commodity prices, but some of the increases in V-Guard is also because of a change from outsourcing to insourcing. And once these factories gain scale, we will have further increases in, gross margin. So, Sudarshan, anything to add?
Yeah, that's the other expenses line has elements relating to factory. And during this transition, when we are moving from outsourcing to in-house, the base year and the current year are not really comparable. Just wait for another 2-3 quarters, then the base also becomes on the same basis.
So what percentage of our manufacturing is in-house this quarter versus same quarter last year?
Currently, it's about 65%.
There is 65% plus there is Sunflame, not Sunflame, sorry. There are, 65%. Last year would have been?
7-8% less.
About 8% less, yeah.
But also, Mithun, what happens is, it's not a matter of, sales percentage, like the factories which are coming up, the manpower there. Because, they are all going to get commissioned in November, right? People would have been hired before, trained and all those things.
Yeah, so we have one factory that is getting ready for some of
Sonali, if you see the movement also, it's not really that significant. You look at first half, other expenses has gone from 293 to 370. Okay. 293 did not include Sunflame. Sunflame is 23. So 293 plus 23 is 316. 316 has become 370. It's not really a huge movement, actually.
Understand, sir. So my second question is about the festive demand with Navratri behind us. What kind of consumer sentiment did you see, especially in your appliances portfolio during the festive season, and what are the indications you're getting for the upcoming Diwali season?
So, see, like Ram said, in fans, we are getting traction, also because we have some new launches that are doing well. We have recently launched a new range of fans that is getting good traction. Water heaters, like I said, more than Diwali, it is that season is yet to start. Although, because of Big Billion Days and those kind of pre-Diwali sales, e-commerce seems to be, some sales to be happening, but general trade sales have not yet really started. So we'll wait and see how it plays out. Typically for us, it's once we complete the full month of Diwali only we can comment. But we can say that water heaters, we are still seeing some stress. The others are largely doing okay.
Understand. So my last question, any significant pricing action if you have taken during Q2 or any planned pricing actions in Q3? Either way, either upwards or downwards.
See, there's hardly any pricing, at the best, I think almost entirely it is volume growth. Whatever sales growth you're seeing is volume growth. There is no pricing increase, happening. Like I said, there is still pricing gaps existing in fans, especially ceiling fans and electric water heaters. And that we are hoping to take in the next 6 to 9 months' time. Ceiling fans, we still have not, we believe that the industry has still not fully passed on everything. Primarily because there was also a major shift from the traditional fans to BLDC fans. So, so it's not, some of the older models are not, finding takers. And that's also one of the reasons why some companies have not, fully passed it on.
So how much of your fans portfolio is premium and how do you define premium? price point?
Ram, you want to take this?
Yeah, I think, I would say that about 40-45% would be premium for us. Yeah. And that would be like, above, let's say, closer to, to 3,000 plus kind of price point, right? So.
Understand, sir. Thank you very much for answering my questions.
Thank you. Ladies and gentlemen, you may press star and one to ask a question. The next question is on the line of Aniruddha Joshi from ICICI Securities.
Yeah. So, sir, we have facilitated key and
we can't hear you properly.
Yeah, is it okay, sir?
Yes, sir. Please go ahead.
Yeah, sir, we have a fans facility at Roorkee, I guess, under a separate subsidiary with a lower tax rate, effective tax rate. But we are still not seeing any reduction in the consolidated tax rate. So, how should we see the overall profitability happening at the new plant? And any tax rate guidance that you would like to give? That is question one. And secondly, I guess 3 to 4 quarters ago, I guess we had introduced water purifiers through the e-commerce channel. So any update on that, and regarding the general trade launch, any update on that?
Roorkee plant is under V-Guard, so that will not impact the ETR. The plants which are coming up under the new subsidiary, the only one which has reached scale as of now is Pantnagar. So for the effect to be seen, we just need to wait for a few other plants also to come up.
So the new manufacturing entity, the first plant, the only plant that is running today is the Pantnagar plant. That is giving us some tax benefit, but it's still small in relation with the overall, tax outgo of V-Guard. So we will start to see maybe end of next year some reduction in ETRs, because as the new manufacturing entity will be under about 17% tax vis-a-vis 25% for the company.
Okay. And regarding water purifiers?
Ram, you want to take this?
Yeah. I think, water purifiers are doing well. I think, one of the reasons that, we decided to limit it to commerce is, of development of offerings, right? And we've had very good success with the offerings that we have brought to the market. And the commerce is getting well. It is today, I think, probably our second largest category after water is on com. So even ahead of stabilizer, and so that's the good part of it. And I think we will get to mature the product portfolio best, so that we have to address the segment, and we are able to we are confident that these stocks having consumers, we have a good installed base to get good feedback. I think, post that, I think, we will get it into general trade. And I think even there, I think our focus will be on organized retail, because I think that, it's easier to reach and, better to manage, because, being a late entrant in the category, I think educating the consumers about, V-Guard and, the benefits of our product, right? I think that will be key for us to break into the market. So I think at this stage, we will remain at least for another year on e-com before we plan to get into open market. Yeah? But it's going on course, and we are quite satisfied with the kind of traction that we are getting.
Okay, sure. Thank you.
Thank you. The next question is from the line of Rahul Agarwal from InCred Capital. Please go ahead.
Yeah, thanks for the follow-up. The question essentially is on the working capital cycle. The 68 days, I think we've done quite a bit of improvement, I think, over the last 3 quarters. Should we stabilize here, or there is more to improve here?
It will be more or less around this. some incremental opportunities may be there, but it's largely in the right place.
Okay. And secondly, on Gigadyne, I think, so obviously it's a strategic investment and there is some business to be done on the inverter battery side of V-Guard. But are we looking for an exit, from this company, let's say 3 years down the line, where there is a larger fundraise, which will happen eventually to get the product to the market?
See, I mean, we are there for as a strategic investor, so that means we are interested in that product getting developed and how we can deploy it in our business. When a Series B investor comes in, the ticket size will be much larger, so we will hold a small stake. At this point, we have not decided whether we will exit or sell or we are interested in the product capability.
V-Guard is not in the business of private equity, so our current focus is on making sure that this idea moves to from lab to pilot plant, and from pilot plant to the mother plant. That's the next stage. And we are working very closely. We have a couple of people who are working from V-Guard who are working very closely with the Gigadyne on that. And we will see. I think we can't comment what we will do after 3 years and 5 years. We will see at that point of time. But yeah, I mean, like I said, we are not bought into this company to sell out, so to speak.
That explains. Thank you so much, and have a good Diwali. Thank you.
Thank you. A reminder to all the participants, you may press star and 1 to ask a question. As there are no further questions, I will now like to hand the conference over to management for closing comments.
Yeah, we would like to thank Aniruddha and ICICI Securities for hosting this call. Thank you all for listening, and have a happy Diwali.
Yeah, happy Diwali, everyone.
Happy Diwali, everyone.
Thank you. On behalf of ICICI Securities, that concludes the conference. Thank you for joining us, and you may now disconnect your lines.